All right, we're back. Episode 7, The Hustler Circle, 3 Minds, 1 Mission. And if you're first time watcher of our channel, please hit the subscribe button and comment any questions. We'll personally reach back out to you. Today's topic is going to be exciting because we've touched on this subtly in every episode, but we're going to focus primarily on credit cards today, credit limit increases, when is the best time to do it, but also figuring out for those that are watching how to build your kids' credit earlier before they even turn 18. There are a lot of ways that you can leverage your children, either for tax benefits for themselves, to reinvest in their future, whether that is through money market accounts, investment accounts for their schooling, etc., crypto. So we're going to spend some time on both topics, but I want to kick off specifically with the topic of CLIs, credit limit increases. We get this question consistently from clients. It's like, oh, should I call my bank and request a credit limit increase? What should I say? How should I propose this? And D, I know you and I have been doing a lot of research. We've personally done CLIs for our clients and ourselves. And it's a interesting dynamics with specific banks. So some of the bigger banks have certain criteria that they look for. And then some of the smaller banks, not so much smaller, more regional, like US Bank, et cetera, they're a little bit more stringent. They do hard pulls. So there are banks that don't, there are banks that do. But I want to spend some time today on, credit cards specifically, maybe just on the personal side, and then we can chat a little bit more on the business side, but CLIs and the importance of it. So I'm just hand it off to you.
Yeah, for CLIs, you should be requesting a CLI, a credit limit increase, every 6 months. And the way to go about doing it is asking for limit approvals that are at least 3 to 5x higher than what you currently have. A prime example would be if you had, let's say, a credit card for $5,000, you call in, say, hey, I'm looking to do a credit limit increase. Most creditors are not going to do a hard inquiry for a credit limit increase. There's very few out there. We'll maybe put in the comments or in the caption which ones. But let's say you have an example of 5K limit. You call them, you're going to ask for at least $15,000 to $20,000 in the approval limit to be increased. Now, that doesn't mean you're going to get it all, but at least you can land somewhere in the middle. And typically a main reason that we have our clients requested, tell them that you're looking to do home improvements or you're looking to make a major purchase in the near future. The reason why credit limit increases are also so important is because it shows engagement from your side to the creditor, and that promotes more reciprocity and more engagement overall with that relationship. So they're willing to give you more. They just need to know where you're at in your personal life and where you're headed, what you're trying to accomplish. And from that point forward, they'll give you the credit limit increase.
And the banks usually see this as a risk, right? But if you structure in a way where you've been a responsible creditor, you've been a responsible credit holder with that creditor, and you're seeking now to do more, the bank's obviously going to be like, yeah, I'll take it. Because the banks make all their money off of interest, and their expectation is that with your credit profile, how it is, that you're going to pay it back. They're just going to make some interest off of the extra spend that you're going to do on a monthly basis. And Alex, I know you have also navigated this space a little bit across business profiles and your personal credit, profile to get a lot more from the bank. What are your thoughts on just credit limit increases in general?
In terms of credit limit increases, in my opinion, what I've seen best is don't look desperate. Don't have your credit card maxed out or at 80% utilization and ask for a credit limit increase. You have to be realistic here. Let's say you loan someone $1,000, your brother, for example, and he keeps telling you he's going to pay you back. He doesn't pay you back. And then he tells you, hey, give me another 1,000. You're probably going to tell him no because he hasn't paid you the first 1,000. So be realistic in what you're asking for. Be aware of your current utilization and how long it's been at that level. So like if your utilization is 80%, it's been like that for 3 months and you just brought it down, wait a month or two before you ask for the CLI. So just be aware is my best advice. Before you ask for the credit limit increase, be aware of your spending pattern, be aware of your payback habits and where your utilization is at currently.
And that's actually a really good point because what a lot of folks tend to do is that they'll hold the balance because we've been brainwashed to think that holding a balance is better for your credit. Actually, it's the opposite, right? Like holding it and paying it down before the statement closing day shows the bank your ability to be responsible on a consistent basis. But then the secondary part is if you hold an 80% balance, The bank may actually do the inverse of a credit limit increase, right? They'll do what's called chasing the balance. And I'll leave it for D to give a little bit more specific on this, but that is potentially more impactful to your overall credit profile. If you're holding balances, you have 30K cards and you're running 15 to 25K a month, and then you leave that to the statement balance and you roll it over 2-3 months. Yeah. They start chasing that balance, and I'll hand it off to you, Dita. You can give a little bit more perspective on that.
For the chasing the balance, I mean, that's going to be, like you guys stated, like people that have high utilization. But for the topic of the CLIs, another big thing that I see a lot of clients do, and that I've done myself, is when you call in, you can always tell them to give you what's called comparable credit. And then they have to give you credit that's comparable with other creditors on your credit profile, especially if you have age of history with these creditors. Like, what baffles me, and I'm sure for you guys as well, is whenever I see a client's credit profile, they've been with Chase for 10 years and they have a credit limit of like $1,500. And it's like, it's insane. The reason why is because that's a one-sided relationship. They gave you a product at one time, you don't speak to them that often, or you're carrying high balances consistently, which deters Chase from wanting to give you more spending money. So you have to read the room, and you have to know your audience, in this case, the creditors, and like lower your utilization and have it consistently lower. Like, they're not dumb either. Just because you lowered your credit cards for 1 month doesn't mean the the creditors are going to give you credit limit increases. You want to consistently maintain it, and maintain it low with low utilization. And then from that point forward, they'll go ahead and give you those credit limit approvals. And most of the time, for those of you watching this, they give them to me automatic. Yeah, that's fine if they give them to you automatic, but it's a bit easier when you can control how much you're requesting. And if you ask them, again, for 3 to 5x multipliers, they're going to put you in a position where you're going to land somewhere maybe in the middle, or they might even give you the full amount.
Yeah.
They might even give it to you.
And you have some banks that do pigeonhole, certain profiles. So Capital One's a really good example. When your credit is optimal, you have the Capital Venture X, you have cards that are Visa signature, they'll give you 30, 50, 60K limits. Yeah. But when you're starting off your credit profile, they can pigeonhole you and you're stuck. You can get like the Capital One, I think it's like the silver Capital One card. And that literally the highest limit on its profile is 7,500. So you can have an 800 credit score and never pass 7,500, just because that specific card profile doesn't allow it. Yep. So you have to apply for a secondary product, which I was in that situation, because one of my first cards 18 years ago was a Capital One. I've had that card for 18 years. I've always paid it, never been 80% utilization. And the max limit I have on that card is 7,500. But I have a Venture X card that's $65,000 limit.
No, and sometimes we're not factoring in that the approval is sometimes just the algorithm. Yeah. So like, how many times have we literally had our clients call in that, let's say Wells Fargo gave them a 4,000 limit approval credit card, but all of their business credit cards are 30, 40K. Their personal credit cards are 25, 30K. They call in with a simple phone call. That relationship gets cemented that much more, and you just literally raise your credit limit from 3 or 4K to 30K on a phone call because they gave you what? Comparable credit. So sometimes it's just the algorithm. It is what it is, but ultimately you want to be in a place where like you're promoting that reciprocity that you need for the creditor to be in the same playing field as you and understand what you're trying to accomplish.
Yeah, and if you're listening to this at home, we don't just help clients with business funding. We have clients also that their credit cards are maxed out at 27% interest rate per month. They're, giving away to these banks $1,000 a month just in interest, minimum payments $2,000, $1,800, and we help those same clients get a small personal loan, pay 15, 12, or even 18% interest, help them alleviate that pressure, and now they're saving 10% on interest every single month. So we don't just help business funding clients. We can help you if you're in a tight spot and you have some personal credit cards that are maxed out. We can help alleviate some of that interest by getting you a small interest personal loan.
Yeah, and you don't always need to win in every single one of these engagements. Like, the creditors need to win sometimes. I'll give you a prime example of what happened to me recently. So I was looking at my own credit profile. I'm like, all right, cool. I'm in a place right now where I can use a personal loan. So I've already developed relationships with many creditors. So I said, okay, Citi, I've never gotten a loan from them. I already had a loan available, but I was doing so many things and I wanted like 25, 30,000. So they gave me what was called the flex loan. The loan, I didn't read it properly and the rate was lower, but they took it from the available credit limit from my personal credit card. So in reality, it was more like a cash advance from my credit card that still had the same high interest rate that was on my credit report previously, which means my utilization was still high. So it really negated what I was trying to do, which was lower my revolving sources of debt, my credit card utilization, and throw it on one installment plan, installment loan for a personal loan. And then the inverse happened. I actually jacked up my credit utilization more, and then I had to end up grabbing the cash, paying it off anyways. So I ended up paying, I think in this instance, like 12%. But now what do I have? I have a $30,000 paid off loan with Citi within 60 days. So it's like, yeah, I didn't take a huge W. I didn't take a W whatsoever. It was a loss ultimately. But now I have a $30,000 paid off loan internally with their internal credit scoring for Citibank.
Yeah. And I'm like, and I think that's the component that we have to, kind of figure out, and we help our clients, figure out, and this channel is going to provide a lot more guidance on, is there's specific things at each bank that we are testing ourselves. So everything we mention, we test ourselves. So this is not like go try this, let me know how it works.
The strength of having one relationship. Like, okay, forget like maybe you're too lazy to do all the 5-6 relationships that we're telling you to. Fine, whatever. You do you. But if you want to do one relationship, I am telling you, and you're going to hear it now from him. Tell them the story about the guy that had the Publix accounts on his credit.
Oh my God. I think he had
how much did he burn Publix credit union?
Yeah, it was a Publix credit union. They have their own bank, and it was over $165,000
with Publix.
With Publix, and
this guy burned Publix for $150,000 in collections,
and it was crazy because, like, and a credit report tells a deeper story than anybody can tell you verbally, and we see this as clients. It was like, oh, I had a tough time. I'm like, man, to get to 150,000+ in burned credit cards, with a bank, that means you strategically did this. Like, there was a time where they were just lending out money, and you were like, I'm taking it, and I'm taking this to the ground with me. But that's the mindset that everybody has to have, with the exception of the burning. It's like, how do I leverage the bank to its maximum capacity that I can physically pay back? Because if you can pay it back, you now are like in your situation where, you took a small L on that loan, but now you're the ultimate credit person that they're going to come after you, and they send you offers consistently. Now you're going to potentially get another one that is an actual physical loan, or you can get a loan on the business side, or you can be the guinea pig for a product that they're releasing in the future. Because you've set your profile up. So that's a good segue into the banks that we feel are best and most primed to either get credit limit increase, establish some credit relationship with. In my experience, American Express, Chase, and even like banks like Discover, those three
huge on the personal
I've seen
side.
On the personal side are humongous. Why? Because American Express obviously started as a credit card company first, but now they have banking products. They have checking accounts,
business checking.
They have business checking. They have high yield savings accounts,
lines of credit.
So now you're shifting into a space where it's a 360 solution, and all those solutions auto unlock themselves when you start paying off your credit cards.
You want a nice hack for any business owners that have American Express? Download and set up your American Express blueprint. Connect your business checking account, and you're automatically going to be prone to getting higher limits. That's just an automatic free hack I'm going to give you, anybody listening to this, right?
And we have our business, one of our consulting companies, I just connected our bank account, and I did it because I wanted to see how the system would react. Our credit limits increased automatically on the credit cards, like you mentioned. And the other thing is that we haven't even had 2 years worth of business, and we already got access to $100,000 line of credit. I'm like, literally, like, so you go to the big banks, minimum requirements, 2 years of tax returns, and our business is only a year and a half, and we already have 100,000, which is more than most of our clients that who come to us that have tax returns.
Yeah, and then you get unique type of incentives and rewards. There's like a cute little button on most creditors' websites called My Offers. And if you look at the My Offers, you'll see like just from literally one day to the next, hey, line of credit pre-approved. Hey, 0% interest personal credit card for 18 months pre-approved. There's even the Wells Fargo, what is it, the Reflect? 21 months, 0% interest. So lining yourselves up with the tier 1 creditors is of the utmost importance. But in this space, obviously we see that, and we've had our own issues in the past where like certain clients have certain issues and restrictions with tier 1 banks like Chase. So if you have an issue with Chase, Wells Fargo, Bank of America, Truist, PNC, American Express, if you have any issues with that and you don't know where to go, here are 5 credit unions that like I recommend to my clients that will give you great relationships and great output on the personal side. Navy Federal, if you can, but let's just say you can't. Let's start all over. So let's say U.S. Alliance, PenFed, Justice Federal,
U.S. Bank,
and
I would say PNC.
And PNC.
PNC is now.
PNC's fire, yeah.
It's proliferated across. PNC started as the southeast region of the U.S. Yep. Now it's all the way to Utah. So like it's growing to be a national bank now.
Yeah.
So they were a regional bank, and then now are offering services across the country, and they offer really high limit personal cards. BMO Harris,
the big
Citizens,
yeah. I'm like, there are banks that it's interesting. Like the personal side and the business side, it's like waves, right?
Yeah.
So you used to have Regions Bank in the Eastern region. They used to shell out a lot of money on the business side, but then now on the personal side, they're doing that more because it's less risk averse in that scenario. So we'll link a list of the top banks that we think based on remember, your profile is unique.
Yeah.
So if it fits your profile, we'll give some characteristics. But look at that list, comment in the comment section. We'll reply to you directly, myself, D, or Al. But you have to set your profile up right.
Yeah, and I've had clients ask me like, Al, where do you keep your money? Where do you keep your business funds? Where's the best place? And I always say 4 places. One, for me, I have a business Amex checking account from my own consulting company. Then I also have a Chase, or I recommend getting a Wells Fargo or maybe a Bank of America. So that's 2. You want to have Amex, you want to have a Chase or a Bank of America or Wells Fargo, or even all 3. Then you want to have a credit union. So you want to have, like a Navy Federal credit union, like D said. And then you want to maybe even consider getting an online or a local banking checking company.
Like Novo.
Exactly.
Yeah, because they also offer unlocked business lines based on your cash injection every month.
Yeah.
So they also offer merchant services, which I'm like, you can get approved in instant versus the big banks require you to bring everything. Car,
all these banks
kids, firstborn.
All the banks are doing the same things that we're doing right now in terms of the niche. Like zoomed out, a bank is giving a consumer money, making money off interest. That's just literally what the game is. But each of these banks have their own cool things attached to it. Like for instance, as a business owner, I know for a fact if I want to get a commercial refinance loan, I'm going to do it with Bank of America. If I want to get a personal loan, auto loan, I'm going to do it with Navy Federal. Yeah. So once you start getting in bed with all these creditors on the personal side or business, and you really have downtime, and instead of eating shit on Instagram, watching things that are not conducive to the betterment of your business, you start looking at the things that are on the website. Like the same way you're watching this podcast is the same way you can be on the creditor's website, and they are giving the tools to succeed. They'll give you the parameters that they need. They'll give you the things that they need for the application. And from that point forward, depending on your relationship, depending on your rapport with them, they'll open the floodgates for you. They really, really will.
Yeah, and you can park money in different banks without even having to try too hard. And here's a good example of something that I did. I have a Navy Federal personal checking account, and I'm actually the commissioner of our fantasy football league. So in the beginning of the league, before we even do the draft, all 10 members need to send me $500, which equates to $5,000. So instead of grabbing the $5,000 and leaving it in my checking, I put it in a CD with Navy Federal Credit Union because the season's X amount of time and I don't have to pay it out for X amount of time anyways. So I parked all my peers' money in a CD under my name. I'm getting all those points internally with the bank. And then when it comes time to paying you guys out, I'm actually going to make money on the money you had to give me. So you don't have to think too hard about where to put your money. You could just get creative.
Yeah. That's a good example.
And that's I'm never giving you the money going forward.
Those are the perks of being a fantasy football commissioner, guys.
All right. So I know we've answered this in some ways in some of the podcasts, but since we're focused on credit cards, what's the minimum amount of credit cards you should have on your personal profile when you're trying to seek, an investment opportunity, buy a house, open up your own business, and get business funding, etc. We look at profiles every day, and sometimes I'm amazed that a mid-30s person only has 2 credit accounts, no loans, nothing. So we'd love to pick your brain, D, on this, because how many credit cards is enough to at least be considered a strong profile?
5 to 7. You want to have at least minimum 5 to 7 credit cards on your personal credit report to look what's called credit worthy and well-rounded in the eyes of the banks. And the reason why that's important is because you want to show a history of being able to juggle multiple responsibilities and maintain those creditors at low utilization. From that point forward, I would definitely suggest having at least 2 installment loans paid off, whether it's some type of furniture you financed, an affirm loan that you financed, or anything along those lines. Make sure your inquiries are obviously low as well.
That's good. And I think like it might sound like hard to manage 5 credit cards. I have, I think, 9 or 10 myself. Set reminders on my calendar just to pay them. Some of them I just have like Netflix, YouTube TV, which I share with my friends and family. And it does help because the bank still thinks you're needing them, from the lending perspective. And I never close those doors. I have, my age of history, I think it's like 11 years.
Yeah, and speaking about the multiple creditors that you have access to, when going back to the previous topic, the CLIs, like when you're also requesting the credit limit increases, you're going to want to position the creditors against each other. Like they can see your credit report. So they'll see if Chase has given you a $20,000 credit card, but then you're on the phone with Amex because you have a $5,000 trying to increase it. You can literally say, hey, I have a credit card that's $20,000 with Chase, and you guys only have me at $5,000. If you don't put me to the comparable credit, I'm going to close my credit card. And most of the time they'll do it because they want to have the advantage against the next creditor.
Yeah. And I'm like, look, hopefully this helps from a credit cards and CLI and just credit profile perspective. I'm going to shift the topic over to those that are watching that are having kids or have kids and want to understand, like, how do I set them up for success in their credit life before they're even 18? So there are a lot of ways where you can leverage and invest, for your kids early on in their life, whether it's an investment account for their education, an investment account for them to get access to cash, to open up their business when they graduate from high school, or even crypto, et cetera. So we're not going to go specific on which account, what 529 plans or anything like that. Yeah. But we're going to talk a little bit right now about leveraging what the banks are offering and potentially even hiring your kids as employees so they can get, some income and reinvest it into an investment account and stuff like that.
Well, one thing I know that you can do, and again, I'm not an accountant, so I'm not going to be specific. Yeah. Depending on what state you're in, you want to do your research and speak to an accountant. The importance of having a good accountant, I cannot express enough, right? But one of the things I know that you can do is actually pay your kid as an employee, your child as an employee, and that money is actually tax deductible, I believe.
Yes.
So I'm not going to go off into, what that looks like or whatever the case may be.
And the amount, but there's a limit that's there. Yes, but it's legal. It's all in the bylaws of the taxes for the country.
Yeah, speak to your accountant and see what things you can do as a business owner to save money on, instead of paying the government taxes at the end of the year, you can pay your kids, or you can write off a vehicle, or you can, take an expensive vacation for, going to see some clients. So there's a lot of different ways to get creative for sure.
Yeah. And then I'm like, in that same vein, like paying and all that stuff, that money that is considered income and it's not, it's taxable and all that stuff can actually be reinvested on behalf of that child because they're not 18. There are 529 plans that folks can research and figure out what's the best. The 529s is by state that allows you to, you can put in, I think it's somewhere between $6,500 every year. It changes, it goes up, and invest so that your annual contribution makes money for the first 18 years of your child's life, and they can use that for college. If they decide to go to college or some technical skill, or they decide to go, in the completely different path, there's a bunch of different plans out there. But a lot of this starts with, and it's not, $6,500 sounds like a lot of money, but you probably spend that on just weekends going to eat at some crappy ass restaurant
Yeah.
that you didn't want to go to, but you have to go out.
We have a client right now out of Philly that he's building an investment company portfolio for his kid, a real estate investment portfolio. And he did business funding with us. He got around $350,000. He invested all that money into two residential properties. He's renting them out on Airbnb, and he did all of that with business funding.
Yeah.
And I'm like, that's a real life example of like how you can extend your future, right? I mean, because I'm like, right now, everything I'm doing, all of my investments, it used to be for me and my wife. Now it's 100% for my child and my wife. If something happens, God forbid something happens to me. But there are a lot of ways that families can kind of like reinvest into themselves. A lot of that has to do with, even on the credit card side, if you do all this spend, you get all these points, you can go on vacations on your normal spending habits on the business.
Yeah.
So like, I feel a lot of folks that I talk to, they're entrepreneurs, they're trying to juggle their work-life balance. And one of the pieces that you can reinvest into your family is taking them on a great vacation on the business. And there's no tax component to it because it's all based on points.
Yeah.
And it's all based on what you're able and your capacity. And I'm like, that's one of the things that we want to kind of share with our viewers is to make sure that they understand that like there are ways to set up your business spending habits, high yield savings accounts, investment opportunities for your future. And the majority of that sticks and hangs on the ability for you to be smart and work with an accountant to make it fit the use case that you have.
The fact of the matter is,
and also putting the child in a position where like we're not allowed to lean on things anymore. We're like, we say to ourselves, oh, we didn't learn this in school, right?
Yep.
So like, okay, I'm trying to position my child for the future, right? Like it's the same example of like, when you're in a plane and the cabin loses pressure, right? The oxygen masks come down, but you can't help the person next to you if you can't breathe. The same thing with credit. Like you can't help your kid's credit if your credit's messed up. So before you even get into the realm of like, how am I going to get my son or my daughter a strong credit score, or how can I help them build their credit? How is your credit, right? Like, how is your credit? Like, where are you at? Because you're not going to add them on an authorized user on a credit card for $300 limit that has $298 balance with 98% utilization. Like, let's be frank. So the first step in helping others is make sure that you're in a healthy place, especially when it comes to your kids, especially when it comes to credit, because you want to put them in a position where they're going to be able to win the most that they possibly can. But like, it has to include all the sectors of life. It can't just be that you're feeding them healthy. It can't just be that you're teaching them discipline and respect. It has to also be financial discipline and financial security. And it's not by one move and a one size fits all approach. It's day by day building the house and making sure that when it's their time to depart, whether it's 18 years old, 25, 30, whenever they leave the house, they're in a place where they can feel safe and secure because of the foundation that you built for them.
yeah. And a lot of people think that to make money, you need to have money. You don't. You just need to have credit. Because if you have credit, you can just get money from the banks. And again, like we've always talked about the plan, if you have a good plan in place and you can provide a service or sell a product, you can grab the bank's money and you can start making money off of it. In the future, in the very near future, we're going to be doing content, starting businesses from scratch with the bank's funding and scaling them and showing you how we're going to make money off of the bank's money. I mean, we've already done this. We're just going to record it this time.
Yeah.
Yeah. And I'm like, look, and I think that's the component. And I'm excited because we're going to be sharing, not only how-tos, but we're also going to create a network. So, stay on the lookout, follow us because we're going to allow folks to come in, to a group setting. And once a week, potentially, we'll just hop on a Zoom, answer any questions that folks have.
Yeah.
There's so much to be made in this space and to help businesses. That's what we like to do. We like to help businesses scale, but we also like to help businesses get started because we've learned how to do it the complete wrong way.
Yeah.
And we don't want folks to we want them to learn from our mistakes. That doesn't mean that it's a bulletproof strategy, but you got to start somewhere. And I'd rather start from a position of you're learning from people who already made it.
Yeah.
And that's going to be the most powerful component.
When we get clients funded, I get like a dopamine rush.
Yeah. Same.
100%.
Like it just feels good knowing that we're stimulating the economy. We're getting people access to capital they didn't have, and we're helping them escape that prison of giving up a percentage of their business for some, silent investors somewhere in Montana in a beautiful ranch. You know what I mean? Like, we're helping them get access to the funds themselves, and they don't have to give up 27% a month in interest.
Yeah.
Yeah, and that dopamine goes, 100% every time we hear back a couple months later of like what they did with the funds and how their business is now scaling.
Yeah.
Oh, I always wanted to, get this tertiary part of my business, but I never had the cash to do it. We gave him the influx, like that dentist that, is expanding. He's doing 2 more offices, but couldn't pay his employees. So we got him funded. And then now he's paying through ADP, 0% cards, all of the salaries for all the employees for the first 6 months. So he's not like this for those first 6 months. And now we're at month 5 after we got him funding, and the business is flourishing. And he no longer owes any money because he's paid everything back.
Yeah.
And that's like the type of vision. Not every business is like that. And I'm like, you got to be, ready to lose some money that first 12 months. But if you have an existing business, you're expanding, but you don't want to use your hard-earned cash, it's just a no-brainer. It's a no-brainer. And it's exciting because we have so many opportunities to make this work for so many different styles of businesses.
Yep.
And this is a shorter podcast because we want to keep giving some really good insights, but keep it, truncated in some instances. So if it's, again, the first time you're watching this podcast, hit the like and follow button. Comment any banks that you heard or questions that you have about which credit cards you want. Or if you want to hear more about like business ideas and strategies of how to fund your business from the inception, also comment that below and we'll reach out and we'll let you know when we're shooting out that content. Appreciate you guys and stay tuned for the next one. Take it easy.
Bye, guys.